host, Ricky Tucker, and our guest today is Mr. Leon King. Mr. King is the director for the Business Lending Network for the National Black Business Support Corporation. Mr. King, it is great to talk with you. How are you today?
Doing well, Mr. Tucker. How about yourself?
Good. No complaints here. I'm always the same. No complaints. Really, really fortunate to be here and really excited about getting the opportunity to talk with you. So today we're going to talk about alternative financing. Is that correct?
Yes.
All right. So first of all, tell us what alternative financing is.
Well, alternative financing is just a different way of securing financing for clients who don't qualify for traditional bank financing. There are generally three types of loans available for business owners. There's the traditional bank loans and bank and credit union loans. There's the SBA loan, and then there's the what is known as the alternative financing group, which includes funds provided by private investors. Banks also does private lending through their non-bank networks because they can only do a certain amount of loans uh, for through the banks because they have certain federal guidelines that they have to follow. And so they have to maintain those guidelines and lend within those guidelines.
Okay. Well, that leads to the next question because, I'm so used to hearing about the traditional, but this alternative. So really, what is the difference between traditional and alternative financing?
Well, as I said, traditional financing is generally done by banks, credit unions, and other large organizations that do loans. You have to have great credit. You have to have security to collateralize the loan, either by having deposits at the bank or the facility of the lending institution, or you have to have collateral, what is known as assets, and assets can be anything from real estate to equipment to accounts receivable. And in some cases, lenders will even allow you to securitize your loan with personal items such as jewelry and art. And those kind of even if you boats and other equipment and recreational vehicles also can be used as collateral.
It's quite interesting. I would imagine it takes a while to really get to the point of knowing all of this. So let's take a couple of steps back and tell us how you got involved in this industry because it's quite interesting.
Yeah. Well, yeah, I had always wanted to do finance. My career took a circuitous route. I started in as a food service director, and end up having a great opportunity to join a company in the early stage of a mortgage company. At that point, they were doing just residential. And I did residential lending for about 5 years, but I saw the greater challenge of doing commercial loans after having a couple of the companies and owners come to me seeking commercial financing while I was actually qualified as a residential lender. So it's been interesting. It's been challenging, just learning and following through on understanding the inner workings of commercial lending.
Interesting. I must say, I tell people on a daily basis, whenever someone asks me how I'm doing, I always say I'm doing amazing or I'm doing great or it's a great day or something like that. So I've been really fortunate over my career and in my life to not have to look for try and secure any alternative financing. Why would someone need to get alternative financing?
Well, when you don't qualify for traditional bank financing, bank and credit union financing, then you don't have much of a choice. You can either try and secure funds from family or friends, or you can go the alternative route, which has been specifically set up and established to fund business owners who don't qualify for traditional financing. This whole industry was created, for that purpose, and it's generally people. One of the primary um, reasons that people seek alternative financing is that they look for what is known as factoring loan or accounts receivable. Um, Business owners generally business owners will make a product, sell it, and when they send the customers the invoice, then they have to wait to be paid. So and that's anywhere from 30, 40, 60, 90, and even sometime 120 days. Well, that's 4 months out at 120 days. And most businesses cannot wait that long to meet payroll and to replenish inventory and to, just cover the cost of operation. So they look to sell those invoices, those open invoices, to what is known as factorers. And these factorers pay by these invoices at a certain percentage rate of the actual face value of the invoice. And so and once the invoice is paid, then the lender receives the payment, deduct the amount that was advanced, and then return the remainder of that payment to the borrower.
Okay, great. You may have given this answer within some of your statements earlier, but for the folks that are watching, I'd really like for them to get a direct line so that, first of all, they can try and contact you so that they can see about
Mhm.
getting some alternative lending. But this is going to be a two-part question. One is what keeps people from qualifying? And the other part is how can you help them to qualify?
Yeah. Well, what keeps a lot of business owners and people in general from being approved for a loan is having poor credit. Um, Poor credit is the number one deal killer in the loan industry. Um, if you don't have good credit, you might as well kiss it goodbye or be prepared to secure funds through an alternative or a hard money source at a much higher rate, which it can wreak havoc on a business that's already struggling to maintain the necessary capital to support the business operation.
Okay, great. Now, I know that you're a great man to do business with, but I'm sure that some people out there would want to know about how long would you be, and I'll use this term, locked in when you use alternative lenders.
Well, alternative lenders offer, for the most part, the same terms and conditions that a bank or traditional lender would use. They offer anywhere from, a 5-year term to a 30-year term. So it just depends on what you're using the loan for, what the collateral is, and the whole business purpose of and the use of funds for whatever business purpose that the client is seeking funding for.
Okay. And could you give us some requirements that for alternative financing?
Yeah, yeah, good. Starting off with good credit,
Mhm.
and then based on the business entity, what you want to do in terms of the use of funds, and how you plan on securing the funds. Sometimes loans range from anywhere from mobilization. If a company wins a new contract and they don't have the money to cover the soft costs to start that contract, such as securing insurance, securing materials to start the project, to house their employees if they're going to be off site, to computer supplies, then there's you can get a mobilization funding for that will go up to 20% of the face value of that contract to be able to do what is known as mobilize for that project. The other forms of those of alternative financing, as I said, is accounts receivable, which is very, very popular for companies that have contracts that are performing work on what is known as a progress billing basis. They do a certain amount of work and then they submit their invoice for payment. And as I said earlier, that can take anywhere from 30 to 120 days. So they then seek out an accounts receivable financing person or a factorer and secure the fundings they need to replenish their cash flow so that they can meet the necessary business operating expenses.
Oh, so another two-part question. Can I move from needing alternative financing to being able to qualify for traditional financing with you?
Yes, yes. And a lot of times, I can't say most, but a lot of times, what happens is that a bank will refer a client that don't meet their qualifications to us in terms the qualifications in terms of credit, assets, you know, time in business, and so forth. They will refer them to us, and then we then secure the funding for them, generally at a higher cost, but for a short term. Once they then demonstrate for 1 to 2 years, either pay the loan off or debt service, do the debt service, and make sure that they're paying on time and there's no late payments, no failed payments, none of the things that would be derogatory. We then work with that client. And once that loan is paid off, we then can present them back to the bank.
Oh,
So for further funding. So it just depends on the client and what they want to use the fund and how committed they are to really running a financially and operationally successful business.
so what's an average time frame? Maybe a year or two, moving from the alternative financing to traditional? Or does it just
It
matter? It
depends.
depends on the person.
It depends on each situation.
Mm.
There's no set time frame. As an example, if you have if a client has a 550 credit score, and we have to put them and they have they own an office building downtown. Um, we can secure funding from a hard money lender, but most of the time those lenders will have a minimum time that money has to be outstanding, or else you pay what is known as a prepayment penalty. So if you need $100,000 and you got an office building that's worth $300,000, we can go to the hard money lender and secure you the $100,000 for a 5-year term. But if you pay that loan off in 3 years, then you have to pay a penalty because that lender has not earned the full amount of interest that he or she thought that they would. So they charge you a penalty, and this generally it generally is a declining prepayment penalty. As an example, a traditional prepayment penalty may be 5%, and and each year that you have that loan and are making the payments, then that prepayment penalty decline. So if you pay it off in the fourth year, you have to pay with 4 years left you have to pay 4%, or if you pay it off in 3 years, then you have to pay the lender an additional 3% for terminating the loan before its maturity date.
So do you work closely with your clients yourself? You and your team of people work closely with your clients?
Yes, very much so. I mean, we're intermediaries, and we're coaches and counselors, and we make sure that the borrower understands what the lender needs, and we make sure that we convey to the lender what the borrower's qualifications are, the criteria is that they need to meet, and then present the documents to support that they meet that criteria.
Okay. So we've kind of had the meal. Now this is the dessert because I know that the people that are watching, they've gotten some really good information from you. I'll make a correction. Good is the enemy of great. So this was great information, and I thank you for that. So for the people that are really interested in finding out more about alternative financing, how would they, or I'll make it personal, if I wanted to apply, how could I apply for alternative financing?
Well, first you'd either send me an email or you'd call me directly or one of my staff members, and you would describe what your need is, what you're going to use the funds for, and you'd be asked a series of questions, basic questions, to determine whether or not um, we can help you at all.
Okay. Is
And
there
the
some
questions, I'm sorry.
No, no, go ahead. I was going to say, is there some place I could reach out to you? Because obviously, when people have gotten all this information, the next thing is going to be, well, how can I get in contact with them? How can I get in contact with them? So we want them to be able to do that. So what's the best way for them to find out about the company and get in contact with you? Obviously, because being the director for the Business Lending Network for the Black Business Support Corporation, we want to make sure that the organization and you are able to be connected with those people, or those people will be able to connect with you to get the help that they need for their businesses.
Sure. Well, the best way to get in touch with us is to go to our website. The website at www.k-wamfs.com is our web address, and on that website you'll find an overview of the company. You'll see product descriptions. You'll see a Q&A, as well as a form to complete to receive additional information. It also will provide our phone numbers and email addresses, for you to either reach out to us in either one of those three ways.
Okay, great. Well, feel free to share any of the information that you would like here, and that way people can click off or put us on pause and go ahead and get in contact with you right away.
Mhm.
So I'll repeat the website, and then any other information that you think you'd like to share, please feel free to do that. And so you said that website is www.k as in kite dash WAM as in Mary, F as in Frank, S as in Sam.com. Is that correct?
That's correct. Yes.
All right. Well, we want them to be able to reach out to you. And once again, Dr. King, yeah, I'm calling you Dr. King because I tell you, I feel like I've been to the doctor and gotten a great diagnosis. But Mr. King, thank you so much for sharing this information with us. And we know that Dr. Eugene Franklin, who's the master, and he is the person that leads the organizations, and so we're really happy that he's tying your organization into the greater organization, and that you are the director for the Business Lending Network for the Black Business Support Corporation. So we really thank you for your gifts and your talents. What advice would you leave the viewers with? There may be someone that has pretty good credit, someone that may has great credit, and someone that may have poor credit. What advice would you give each of them?
Well, first of all, I would start off by telling them that There's a lot of valuable possessions that we, as individuals and as business owners, have. But one of the items that are right at the top of that possession is good credit. Uh, Being able to have a credit score that's 700 or higher. The highest credit score is 850. Uh, and if you have an 800 plus credit score, you know, lenders are going to be pursuing you. You won't have to pursue them. Um, if you have a 500 credit score, you're going to be rejected in more ways than one. As a matter of fact, I just had to tell a gentleman this evening that based on his credit score, that we would not be able to secure the loan with the lender that we were seeking. We have other alternatives. We have hard money, but it's going to be anywhere from 10 to 15% interest rate for those funds. And when you don't maintain your credit, what you do is you just give away money, and most of us cannot afford to just give away money, to toss it up in the wind and let it blow away. We have defined and specific uses for it. So my advice and suggestion is to make sure that you know what your credit score is, and most of all care about your credit score, because I've encountered some people who have a 400, 500 credit score, who don't who says, okay, so what? I deserve credit. No, you don't. You don't. You have to be able to manage and make sure you understand the cost of doing business. Good credit is one of the primary costs of doing business.
So there is that accountability, and basically what you're saying is if you hold yourself accountable to doing the things that you need to do, then you're rewarded with a higher credit score. And you've mentioned one thing, you've mentioned something throughout the talk today, our talking today. And I want to make sure that for those folks that are not really, really crystal clear about what it is, you've mentioned hard money. Could you quickly tell us what hard money is?
Yeah. Hard money is the source of funding that you go to when you don't have any other options. There is hard money will generally hard money is provided by private individuals. Okay, and they will loan you up to, generally, depending on what the project is and what the collateral is, but most of the time they're going to loan you up to about 50% of the value of whatever it is that you're trying to use as collateral. Now that's a low amount, because traditional lenders and alternative lenders are going to loan you up to 75% of the value of the project. So you see, right there, you're already losing. Now you've lost 25% of the capital that you traditionally would qualify for, because because of your credit, and we haven't used a hard money lender as a source.
Yeah.
So they are what is known as lenders of the last resort. There's another, and they include what they call merchant cash advances, where you can get a loan based on your annual gross revenue, up to 10 to 15% of that. But again, I've seen rates 25 to 30%, and some even higher. I mean, that's quite a price to pay for not paying attention to your credit. If you have a problem meeting your obligations, call the creditor and work with him or her to be able to minimize the negative effects on your credit. There is nothing in business more critical than the owner's protecting his or her credit.
Thank you very much. And I apologize for giving you a new name. So I was thinking in my mind, wow, Dr. King is the financial doctor. So,
Mhm.
but Mr. King, thank you so much. It has been an honor to get an opportunity to learn from you and to get an opportunity to talk with you. So,
Okay.
once again, ladies and gentlemen, we've had Mr. Leon King, and I think you were about to make some closing remarks there.
Well, I was just going to say that one of the things that I had you had asked that I don't think I covered. I covered both the accounts receivable and asset-based loans, but there are others out there. But again, generally lenders in the alternative market look for assets to serve as collateral. Credit is an asset as well. And so, not only do you have your equipment that you've worked hard for and accumulated, so there are different ways and different types of collateral that will help you secure the funding. But most of all, again, I repeat, the most critical component of seeking any loan is credit.
Well, thank you very much. And again, thank you for drilling down some more. And so, ladies and gentlemen, you can see that Mr. King really is interested in helping you to get the financing that you need. So, if you don't mind, please reach out to him, as we've said. And once again, we've had our guest today is Mr. Leon King, is the director of the Business Lending Network for the National Black Business Support Corporation. And I'm your host, Ricky Tucker, and it has certainly been a pleasure to be with you again here today, Mr. King.
Thank you so much, Ricky. It's been a pleasure.